Well, let's get more on this now with Alia Kajee in Johannesburg. She's a public finance campaigner at 350africa.org, which is an organisation dedicated to tackling the climate crisis. Welcome to the program, Alia. Really good to have you here. Firstly, we've got 450 of the world's biggest financial institutions now pledging to factor in the climate crisis in the decisions they make. Now, those organisations control $130 trillion worth of assets worldwide. What do you make of this pact, which is, as we heard there, the first of its kind?
Hi, thanks for having me. I hope you can hear me well. I wanted to start by saying in order to and react to this pledge, we need to start by understanding our financial system as it stands, as it's structured, as it's globalized and governed, brought about the climate crisis as we know it, and nothing short of a radical transformation in the machinery of our financial system will address the. And so this pledge talks to, the pledge talks to factoring the climate crisis into decision making. But that doesn't necessarily directly commit the institutions to actually addressing their role in the climate crisis. Normally, institutions such as the one in the Alliance begin with starting to define their exposure, to measure their exposure, to actually understand the threats that their institutions face, how to measure this, how to disclose them, and then how to mitigate them. More so, these types of institutions are the ones who talk about the climate crisis as a risk to manage, but also an opportunity to leverage, how to gain from the crisis in order to stay relevant, and as mentioned, how to stay profitable. What we actually need is accountability, responsibility, and compensation for a crisis that was created. Finance has not been neutral in this, and so pledges such as this one will only really be meaningful if they commit to actually ending funding for fossil fuels, and if the Paris Agreement is met with consistent financial flows away from unsustainable sectors and towards just and socially resilient and environmentally resilient sectors. And so looking at the list of banks, insurers, and asset managers within this, they already include some of the world's biggest fossil fuel funders, Barclays, BlackRock. And so what really matters now, as been said, are the actions and commitments of absolute emission reductions.
That's right, because you've been campaigning quite heavily to stop financial institutions from what you've called the, quote, criminal funding of fossil fuels that's killing populations around the world. So do you believe that it does remain to be seen whether or not these financial institutions will ultimately stop funding carbon polluting projects such as coal mines?
In this format, I don't believe so. I believe it needs stronger regulation, as does my organization and many in civil society. We need that regulation and consistency from governments and central banks. Civil society continues to demand greater transparency and accountability, as well as participatory decision-making, especially where those primarily affected by a transition away from fossil fuels and those affected by the impact of the climate crisis need to be included. We have to understand that the transition away from fossil fuels could raise enormous equity concerns as well, where richer countries or richer institutions can afford to divest as well. They can divest their investments in fossil fuels, but leaving them to be dealt with more vulnerable countries. And so when we look at whether or not they will actually be stopped, one, we have to see how that can be equitably stopped, but looking at how institutions, especially in the financial sector, tend to view the climate crisis and how to understand finance with the sustainability lens. We here talk about integrating environment, social governance factors, ESG factors into decision-making, into asset-level decision-making. But this is all a common approach to sustainable finance that actually explore new ways to continue making a profit. And so regulators really need to rein them in to ensure that we get the resources we need, but that finance is part of the solution and not part of the problem as they have been. Yes. Transparency becomes very important as this in this process. We've seen institutions such as the World Bank or other multilateral development banks already make these commitments, but fund fossil fuels indirectly or through intermediaries.
Yes.
So will they stop? We'll have to see.
That is the question. And as they say, the devil will be in the detail. Alia Kajee from 350africa.org. Really good to get your analysis. Thanks for that.